Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, May 18th, and TJF to all of you. Hope you guys have a wonderful upcoming weekend. And light day today, as I mentioned yesterday. There's no economic news releases scheduled for today, so we'll jump over to the headline news. Also, next week will actually be a pretty light week next week, so a lot of it will probably be Europe that will probably dictate things. But the stock market's up a little bit today. There's not a lot of trading. One of the things that's kind of helped boosting, and I had to put it in here, is the Facebook IPO is coming out. So you got probably a lot of anxious investors out there waiting to get in line for the Facebook IPO. But more what I did include are, topics that affect us, what we're looking at, are interest rates and such. And today, Moody's downgraded about a dozen Spanish banks. And then Fitch also downgraded Greece to triple C from a B minus. Now, there's also obviously a lot of concern going on regarding with Greece. What happened was a couple weeks ago they had a election for the new parliament, and I guess they have to have. There's no true party that has the numbers that need to formulate their parliament. So looks like they're going to have another looks like it's going towards another election next month. So this could get dragged out for about another month. And meanwhile, the party leader that looks like Trisba, I think his name is, if I pronounce correctly, the kind of far radical left is basically kind of saying that, it's not Greece. Looks like he could be the next prime minister for Greece. And basically, he's saying that if the Eurozone doesn't continue giving money, then they're going to be forced to basically suspend paying, and then use that money that they would have been paying the creditors to pay their, hospitals, schools, and stuff such as that. So basically, there's a threat that they would withhold payments to the creditors if they stop giving them money to make their payments and such. So as a result, that could lead to an exit from the European community. Now there's also concern that could have a ripple effect to other countries like Portugal and Spain, as we've been kind of hearing about. So those are what the concerns are, and obviously that would kind of desecrate a bit more of the the euro, as it's kind of built up to be a pretty strong currency. So this could obviously weaken the currency, and as a result, U.S. dollar has been kind of getting strength. So this is kind of give you some background information why this is kind of important, why investors are looking at this, and see if this could be a ripple effect to kind of break down the rest of the European community, as this maybe could be the beginning, and other countries could basically follow suit. So let's go ahead and jump over to the bond market, see what interest rates are doing today. As you saw, we had a pretty big rally yesterday. We started the day lower today, I believe it was about 6 to 9 basis points lower, and then we're down another about another 3 basis points. So we're still pretty good. So depending on where the rates were yesterday, if the price, we could be slightly lower or about the same, depending on when the letter came out with their pricing. We did have some price adjustments to improvement yesterday, but some may have held off till today and may be basically at the same rate as where they left off yesterday. So it depends. A lot of lenders will, especially East Coast, are ahead of the game, and we kind of the rally kind of late in the day, so they may not have made any adjustments to the pricing, may have done it for today. So as a result, pricing is about the same or a little bit better on interest rates. And you guys have a wonderful weekend. I'll catch you guys on Monday. Stop by Mike's Daily Market Report, get your free updates, and subscribe.